And so, I'm starting off with my my new thing where I'm doing this cheesy opener jokes. So why did the fraudster go to art school?
I don't know.
To become a scam artist.
Oh my gosh! All right. Where are you finding these? Or is it all you? Just.
I'm prompting ChatGPT.
I didn't want to put you on blast, but I knew.
I tweaked it. They had some different ones, so I'll tweak it. It still does require human oversight, so we'll keep everybody up to date. Every single week as these jokes evolve, we'll see if ChatGPT really nails it or if it still does some human intervention. So in real time, through this podcast, we'll be able to discover how is AI progressing.
And presumably, it's getting better and better each time.
So no time for a lengthy intro here beyond what we did. So we've got a dozen things to talk about, actually. So let's get flowing.
Sweet.
Fintech Flo.
Welcome to the podcast. This is the Fintech Flo. I am Drew Carrick, active CPA, your co-host.
Mike Whitmire, co-founder, CEO of Flowcast. I got my email this morning that I'm officially active again. I got an email like last week saying you're not active, and it was another one from the compliance board. And I'm like, I've done everything. I took the CPE, I took the ethics exam, I sent my check-in. What's happening? And they're like, we never received your check. I'm like, can I just pay online? And magically, they have an online portal. I paid my $140 and 24 hours. 24 hours later, I got my email that I'm officially an active CPA again. So boom, I got 365 days of active and then right back to inactive.
That's amazing. I feel like anybody that's been listening along the course of this podcast is like, I've tracked Mike's saga from inactive to whatever the other term was, like illegal, or when you were you went from
suspended, yeah,
from inactive to suspended to being reactivated to dealing with some sort of compliance issue to not paying.
It's been this 18-month saga through all of this, but I'm once again active. I can sign tax returns for a 12-month period here. I can sign audit opinions, and then I'm back to my inactive status after that.
We've got a little bit of that in here too. This topic today is the dirty dozen, and I think a lot of people are probably maybe loosely familiar with the term, the dirty dozen, maybe not in the context of what we're talking about, but every year the IRS releases this thing called the dirty dozen, which is a list of scams and frauds to look out for during that year. So obviously the first tax season is done, the second one is coming up, but it is an annual awareness campaign from the IRS, and it's just to inform taxpayers, business owners, there's common schemes that could potentially impact them. So I figured today we would take an opportunity to go through the 2024 list, just go through them one by one, get to touch on a couple examples, do a little reactions.
I would be very curious next year to look at this again and how has it changed with AI.
Yep.
This is an area where I'm very concerned, like AI is going to be deployed in a big way to commit fraud. So it might be fun to reconcile next year's list against this year.
Yeah, absolutely. So so what are the dirty dozen? So this image we've got here is this is a ChatGPT DALL-E generated image.
All right.
Learning to utilize that which is the main subject of a lot of conversation.
It's fun for making images. This is one of my favorite things to do with like Midjourney's the other one, DALL-E. Yeah, this is a fun part of it.
But as you can tell, it's still not mastered the spelling portion. So if you're looking for a scam or a fraud or somebody claiming that they made something and you're kind of doubtful of whether they have that art skill, look at the spelling. That's usually one way to be like, yeah, we've got dirty spelt without an I and dozen spelt without an O.
Nice.
So we got this list from the IRS website, and here's something. I put my auditor hat on. I looked on the IRS website. There's only 11.
No way.
Yeah.
Oh, boy.
I had to fact check myself. I was working on this on Sunday, and I am like going through this, and I'm like, what am I missing? Like, why am I getting a different amount when I'm trying to reconcile? I was literally trying to tie out my list of what I wrote down to the IRS website, and it wasn't tying out because I renamed them to make them more user-friendly names because the IRS has these just very complicated titles for each of them.
I appreciate that.
Yeah. And I was just trying to reconcile where it was, and then I just actually counted, and I was like, oh, no, there's actually only 11 bullet points here. So I don't know if they group two together, but I'm just going to run.
Come on, IRS. Come on.
I'm going to run down the list right here just so we get the names of them all up on the board. We got bogus tax avoidance strategies involving fraudulent offshore schemes, ghost tax preparers, I don't know if you heard of that, high-income filers vulnerable to illegal tax schemes, social media tax advice, that's a favorite of mine.
Okay.
False fuel credit claims, aggressive ERTC promoters, compromise mills, fake charities, spear phishing attacks, phishing and smishing scams, helpful online account setup scammers.
All right.
So I kind of grouped them by overall themes. So
can I add a 12th? Oh, well, this isn't IRS, but have you seen this scam going on with people applying to Flowcast?
Oh, I did recently hear about this sort of people doing some outbound mail and telling people.
It's nuts.
To
Yeah,
send money.
we opened up a social media role, and all of a sudden we start getting messages on LinkedIn from people saying, "Hey, I received an email from at theflowcastxyz.com telling me to submit my information and a text message interview, and they need me to send their financial information to like purchase a piece of equipment for the interview." And so people are at least reaching out to us directly on LinkedIn, confirming if this is a real thing or not. But yeah, we have this whole scam going on, and we're talking to our IT department, like, how can we block this? How can you can report the domain all you want, but then they're gonna fire up more domains around it. So there's actually like nothing we can do about it. It really sucks. So if you listen to this and you're applying, if you ever apply to Flowcast, it will come from @flowcast.com. Look at the domain closely, and we're not going to ask you for any financial information ahead of an interview. So, man, but that's just so lame, and it doesn't make us look good with this going on either.
And that actually is a perfect segue into, I'm just going to skip to the second one just because of you mentioning that. That's spear phishing.
All right, there we go.
So spear phishing is a type of phishing campaign that targets a specific person or group and often will include information known to be of interest to that target, such as current events or financial documents. In this case, it's particular to a company.
A job. Mm-hmm.
And I guess, you've made it when you're getting spearfished. Like nobody's spear fishing goldfish, swimming around or little tadpoles, but you'll go for the big tuna, I'm sure. Mm-hmm. And so I guess in this case, we've made it to the size where you're willing to, a scammer is like willing to invest in specifically attacking one particular company.
I wonder what we did to get to that threshold of, okay, let's start scamming people who are applying to this company. I wonder if we hit some milestone in their system and we got loaded. And then how automated is this? Is this a team with like integrated systems in Salesforce and they're like elevating like leads? So like, okay, they've hit the lead threshold. They have enough employees. They just raised a round of funding. They're going to go do this. Let's start scamming the people. Like how does it work behind the scenes? Or am I giving it way too much credit?
Could you imagine a scam group that operates like a full-on business where they've got like their Salesforce, like, all right, have we hit these companies yet? Have we hit these people to scam?
I can.
And they've got like, you got a whole telephone group, you got your own little fishbowl of scammers who are calling up different people. I mean, that's just...
Have you seen any of the like catching hackers videos?
No, I haven't.
So the white hat hackers will reverse hack these like call centers in other countries. And there was one I was watching where the guy got to the point where he broke into their CCTV system and was watching them make the calls. And then he called them back and starts saying their names. And you see them start to look around, and then they all look up at the CCTV and like unplug it. Wow. That's the end of it. But they were legitimately, they had an office in an office building next to legit companies all around them. And it was like a group of 5 guys that would go into this office. They had computer systems. They're all making cold calls. Like it was hyper organized. It wasn't this random thing. So like I'm saying all that only half joking. I think they're like very organized and they tracked their hits for the day and how much money they scammed everyone. It was nuts. I was blown away. And then it's so cool to see the like reverse hacking going on, the reverse scamming. It's like, I love white hat hackers. It's really cool.
Yeah. This gives me a good video sketch idea of...
I'm here to help.
Yeah, I mean, this is great. I'm imagining like the quarterly earnings report for the scam organization. And they're being like, well, guys, we didn't hit our numbers here. We got to hit the phones harder.
Yeah, we wasted a whole day with this white hat hacker.
That's funny. So spear phishing,
All right,
targeting specific people or organizations. And I guess, I'm wondering also how much of that could sometimes be generated by just disgruntled or somebody. I mean, we're starting to face these attacks. I mean, from the people who are fake applying to the job to get intel. Mm-hmm. You have flowcaststudios.com. When we tried to get that domain, it's still on GoDaddy for $5,000. We don't negotiate with terrorists.
Nope.
So it is just interesting how they'll specifically target out one specific thing.
And so how is this applied in the context of taxes?
This one is one of the more overall runs. There's an entire slide which is specifically for tax things. I mean, look, at the end of the day, they know who needs to file, and if you can get certain information on somebody, it starts to create that like level of trust, right? Mm-hmm. And so you could apply this across the board to pretending to be the IRS and saying, oh, we know that you recently bought the Toyota Corolla. I don't know, they somehow figured out that you had purchased that car, and they're like, oh, they know that about me. And that's the same thing with the white hat hackers, where once they find out that personal information, it adds this level of like, oh, this isn't just some like ambiguous person on the other side of a phone. It's like, no, they know something about me, and that's what makes it real and makes it a little scarier. But the other thing actually that came up that I did want to point out, because I'm wondering if the fact that it was social media, because that was the posting that initially started this whole process, and it's here I'm going to do my little elevation to accounting here. Is like maybe when they see a bunch of like accounting focused jobs, they're like, maybe we shouldn't try and scam these people. You see the social media job, and you're like, those people probably more easily scammable.
You might be onto something there. I mean, hackers are smart. They're very good at, like, we do our hacker training every year, and there's sometimes the spelling being off is on purpose, because then you disqualify out most people who wouldn't fall for the scam. And people who like aren't as good at spelling, maybe not as intelligent, more likely to fall for a scam like that. So there's some of that is actually a little bit on purpose to make sure they're spending their time with the right people.
Yeah.
Again, a great targeted sales campaign. It's like it's a good way of selling. Anyway.
So one of the most common parts of the list is phishing and smishing. And in these scams, fraudsters send emails or texts pretending to be from the IRS, enticing victims with fake tax refunds and threatening legal actions to steal personal information. So the difference between spearphishing, which is very direct, specific to an individual or a group, phishing and smishing is a little more broad. It's just kind of in the context of trying to, get whatever information out of you. I know everyone wants to know the difference between phishing and
I would
smishing.
love to. I don't know the difference.
So according to research from Georgetown University, phishing is fraudulent emails and websites meant to steal data. You get the link here and take it to our website and log in. Vishing is another one, which wasn't on the list, but is still in this category. I don't know what the obsession with ishing is, but vishing is fraudulent phone calls that induce you to reveal personal information. So that's vish. I meant V for vocal.
I just keep thinking of our VP of Finance.
Oh, yeah, Vish.
Vish, yeah, okay.
That'd be a good handle. So yeah, I think the V stands for vocal.
Okay.
And that's
I bet that becomes way more common with AI.
Yes.
That's a disturbing development on the AI front, is how good it is at having conversations. And so I could see this one ramping up big time for next year.
Yeah. And then smishing is fraudulent text messaging. I'm messaging, the SM comes from SMS. Fraudulent text messages meant to trick you into revealing data.
Okay.
So they're all in the same nature. It's just a different method of how you get there. And I mean, this is just the most common thing. This is on the list every year, basically. There's always like, hey, make sure you're still paying attention to this. And this is the stuff that I think often targets, the elderly, who, I still get the text messages from my mom, like, hey, I got an email from Home Depot, but I don't think we ordered anything. It's like, should I check out? It says like, click here to view your receipt. I was like, don't click it.
That pisses me off to no end.
Yeah.
Yeah.
And I think that's where you also have the danger, and we'll get into that as well a little bit later, how AI is sort of impacting and elevating the quality of these phishing and smishing and spearphishing and vishing attacks.
And the voice one is where I get really scared. It's like, oh, you're going to call someone, have them verify it. It's going to sound just like them. And it's really concerning.
So the third one is fake charities. And I thought this one was pretty fascinating. So, of course, there's always somebody looking to capitalize on a disaster. After natural disasters or crises, scammers create fake charities to exploit taxpayer generosity, soliciting donations that never go to the intended causes. And this is it's one of like the more upsetting ones, because, people are trying to do right. They're trying to do a good thing. They want to feel good about themselves, and everybody's like, oh, I'm just going to take that money. So a hurricane happens, you start calling people in neighboring areas and be like, oh, I work with this organization and we're just collecting funds to help them out. And how many people be like, yeah, I'll give $10. Oh yeah, I'll give $20.
And so this is someone claiming to be part of like a legit charity, but then saying, send the money to my Venmo account here, and then building it up, or someone like creating a fake charity.
Or you could, if you're on the phone, you just be like, yes, if you just give me your credit card information, they'll just charge you $10 and it'll be to this organization. And then, if you're on the phone and you don't look it up while you're, checking to see if that charity is legitimate. It's upsetting that you have to go through that process. And it's like, if somebody from an actual charity was to call, you'd be like, hold on, I got to do a quick audit, make sure you guys are legitimate. And I think that's why it's important that charitable organizations have like explicitly on their website probably something that says like, hey, we'll never call you to ask for donations, or we'll never ask for your credit card information over the phone, or something to have a level of security of legitimacy.
Because I feel like with charities, there's like then two forms of fraud around it. So you could just say, I could call and say, hey, I'm Mike Whitmire, I'm with Red Cross or whatever, would you like to donate? Give me your credit card information, and then steal money directly, and it goes to Mike Whitmire. The second one is like the legit charities that are set up, but how much actual charitable activity do they do? That feels like a tougher one to catch, because for the first example, you could go to redcross.org or whatever it's going to be, and like just make the donation directly there and then not get scammed. But if it's one where they're not actually doing any good and it's just like they take contributions and then pay themselves big salaries or something like that, kind of thing, like you got to do some deep research to figure out what percentage of contributions goes towards the end cause and all this kind of stuff. And that is an area where I think there can be a lot of sketch with charities, because not all of them give the same amount to the end cause. There's a lot of admin expense that goes into running charities.
Which is why I do think, because it is a little more difficult to set up a charity than it is to set up an LLC. And my audit area of expertise was in not-for-profits, and so a lot of charities. And it was always interesting because we had to do an analysis as part of the audit of like where's the funds being allocated and what percentage is going to administrative costs. And the kind of like rule of thumb for most organizations should be like not more than 35% should be going to like operating and administrative. Like 65% of the money coming in should be going towards the charity. If you're running a thing that's like, oh, it's just so expensive to run, it's like, well, maybe you need to reduce and you're just not as big as you say you are. But you can't be just having all your money go to paying people and very little is going there. And I don't think it was it might have been Salvation Army. Some of these organizations that had, I'm not going to put names out there because I don't have my facts straight anymore. But I know it was like 8 cents on the dollar for some of the things. Wow. A lot just goes to upkeeping the stores or. Where do they resell the clothing? Where you donate the clothing and then they...
Yeah, Salvation Army or Goodwill.
Yeah, Goodwill. I think Goodwill was the one where a lot of it ends up just, it just costs a lot to operate.
They do. They're big. They're big stores. They have big staff. Like it is true. But they also have a great business model.
Yeah.
People give them clothes and then they sell them, and there you go. Boom. Yeah. That's a great business model. This is what happens if you aren't in that 35% range.
So that's from the Better Business Bureau, and there's a couple kind of like charity watch entities. The thing that's interesting is only when the government has money involved is there actually an audit required, right? So there's a $750,000 threshold for federal contributions. A lot of states have their own, if they offer a grant to the organization or something, then there's a certain threshold depending on how they're using federal or state funds. Everything else is voluntary. It's a best practice to get an audit. I actually still do audits for a few charities. Through a colleague of mine back in New York. He has a few tax clients who have charitable organizations, and just as a good code of ethics, it's like, we're going to do this to just be transparent to the shareholders. Hey, this is how we're using your money. And I think it's just a good practice and a good thing to do.
I like that a lot. I mean, you're building a lot more trust. I'm trying to find this. So there's like CharityWatch.org is one of them.
But there is no actual, the IRS hasn't specified this is how much has to go. Because I did look into what would be the percentage threshold. And it's just a matter of kind of optics.
Isn't there? It feels like that should be a requirement.
It should, I think.
Like that should be. You can't be a nonprofit if you're not donating a material percentage to.
Well, I would also think
your cause is.
I would also think that the IRS should require, as part of yes, you are a charitable organization. You still have some sort of filings that you need to do annually. There should be a required disclosure of that. That is maybe just you have to have assurance. Like if you're going to start a charity. Maybe you just have to build in, yes, there will be maybe not a full-scale audit, but just some sort of smaller-scale assurance cost to, verify that what you're reporting, this is how we're spending the money. And, maybe there's a couple years to build up of leeway that you have, but just like anything, whether it's a business, you can't have 10 years of losses, right? You have to show that you are making money or intend to make money. Mm-hmm. So there is actually an example from that, a fake charity scam, because this is where, the fake ones, those are straightforward, but it's these ones that are a little bit of a gray area, like a fake charity scam from the Cancer Recovery Foundation, CRFI. Organization misled donors by claiming that their donations would help cancer patients with their rent and utilities. Okay, that's a good cause, but an investigation revealed that barely a penny of every dollar actually reached the patients, and it said most of the funds were diverted to the organization's executives and fundraising expenses. So it's just, we're throwing a lot of events, we're paying ourselves a lot of money, and it's just an excuse to have a business party that you get to write stuff off on.
Generally, the good news is like donating to a charity is usually a very intentional thing you're going through. So before deciding on said charity, perhaps do a little bit of research to understand how many of your dollars are going directly to that cause.
For sure. So that's fake charities. And then the last one on this first grouping is third-party account setup scams. And these are all, again, this is all in that same theme of fake it till you make it is the theme of this slide. Scammers often offer to help set up an IRS online account to get access to steal personal or financial information, which can be used for identity theft. So sometimes there are similar things that aren't necessarily scams, but it still shows the importance of professional skepticism and due diligence. Again, I think elderly are a specific target for this type of thing. It's like, oh, well, we'll help you set up this account. And this is where it gets into the gray area as well. And similar to the charity thing, like there's straight up, no, this isn't a legit website whatsoever. It's just me saying like, oh, let me help you set up your IRS account. That way you can have a payment plan for your taxes that you owe. I'll handle it all for you, and I don't take a fee up front at all. I'll only take it at the end once it's all set up. And people are like, oh, that's great. Yeah, help me set it up. And you could either send them a link to a fake website, or you can just do it all over the phone. You gather all this personal and financial information. There are, however, legitimate businesses that are just like, I think, shady. And I want to call reference to one I particularly dealt with. This is my own lack of due diligence. And when I bought my house, a month later, I get a phone call from a mortgage payment company, and they say, oh, we help to speed up your payment timeline by, we issue biweekly payments. That way you can pay off your mortgage faster. And I've always been a fan of pay off the mortgage faster, reduce the interest, especially up front. Then I realized, I was like, and they're like, yeah, it's just a $500 setup fee. It's one time. You can carry it with you for the rest of your life. And I was like, oh, okay, great, whatever. I realized like the company that I had the mortgage through, their website lets you do bi-monthly payments anyway.
Oh, you can just set it
like
up
I could have just done it my
yeah.
own. I could have just done it my own. And like I think it's one of those things where when you just don't know about it and there's a lot going on, like I'm moving and I'm trying to set up the house and there's so many moving parts, insurance and the property taxes and escrow and all these different things that you're just never familiar with. They just hop in there and take advantage of it. And you think you're doing a smart thing. I'm going to pay off my mortgage faster. I'm going to reduce the interest by having the payments only every 2 weeks as opposed to accruing interest over the course of a whole month. And I just called and I was like, yeah, I don't want to do this anymore. They didn't give me any hassle at all because they're like, look, we got our $500. That was all they cared about. That was it.
Okay.
They got their $500, and then after that, all they would do is take the money from me and then pay my mortgage company for me. And I was like, I paid you $500 to pay my mortgage company for me.
A middleman on that? Oh, okay.
And if like the payment changed because the property taxes changed or whatever, or the insurance changed, I'd have to call them up and be like, yeah, can you change the amount? And I was like, I could just do this on my own right through the portal. And so
it's easier to do it
through
the portal. All right. Well, hey, I appreciate you opening up on the podcast about that.
Well, point is be careful of even if it's not completely fake or a scam. There's still some things.
How much value are they truly providing? Right. That's like just a low value service.
Do your due diligence.
But also with homes, you're in the middle of just everything is so expensive with closing a home. So you're I feel like in a mental state, you're probably just like, oh, what's another $500 at this point? Because it is so expensive to get everything done.
Yeah.
Closing costs.
On to the next slide. This theme is bad advice is the theme of this slide. This is another image generated from
the Puppet Master.
Yes. I basically was prompting Dolly to have, I was like, hey, here's 3 scams and frauds. Give me a visual interpretation of it.
Oh, okay.
Yeah. And I think there was actually at one point when I was miscalculating how many of the 12, when there was only 11, there was another one on here, and this is the one that got cut. So there's only 3 on this page. But the first one is false fuel credit claims. And scammers encourage taxpayers to claim fuel tax credits fraudulently, a credit generally not applicable to most taxpayers. It's not available for most people. Mm-hmm. And in particular, because it's like, well, what's an example of this? A lot of false fuel credit claims are for farmers or for businesses that are off major highways. And I didn't realize this was a thing because we've always lived in cities, but in more rural areas, when the business is very far away from a metropolitan area or a main road, it does take extra vehicles that are usually more gas guzzlers in order to get to and from that premise. Yeah. And it's specifically for those people to be able to get a credit for doing that.
I did not know about that either. I'm actually really happy to hear that. Like one of my concerns in California is we're talking about mandating electric cars, but there's so much, like heavy machinery work that has to be done. Like you think about our logging industry and like not many people think about northeastern California, but that's a thing that exists. And there's like heavy logging and there are very few people per square mile up there and all that kind of stuff. And if you said, no, you can't use gas anymore, that just wouldn't work. So, and conversely, gas is going to get so expensive. How can they run a profitable business doing all that? So I kind of like this. It's like necessary if we want to shift to electric vehicles aggressively, but also still have, like infrastructure where we can get raw materials.
Yeah, I think this is the right balance. It's like, well, people in cities should be on electric because you don't need to waste gas to sit at a red light or sit in traffic. But at a lot of these places, and this is always the balance of rural versus cities in America, and why there's that divide is because it's just the same rules are not applicable in both places. They need different requirements.
Are you familiar with this Northeastern California phenomenon at all?
I don't even know anything of Northern California.
There's a section when you get into like the deep woods there where they're very anti like broader California to the point where there's this, they call themselves the Jefferson Nation and want to secede from California because it is like the cities are so far disconnected with what we deal with on a regular basis to where it's just like, you all want to go through electric vehicles. Like we can't do that. Our entire industry is going to get crushed if you try to do that. So there's this. If you research a little bit, Jefferson County is the name of it, and it's this whole movement to secede because the big city people in California don't get their lifestyle, which is fair.
Yeah.
Like,
are they the ones that wanted to join Idaho? And I think Idaho was like, yeah, we'll take you.
I think that or Oregon. Or like because when you get to like southeastern Oregon, you kind of have like a similar vibe going on there. So
I think I remember seeing a map of some point where they wanted to just cut like a very thin slivers that gets to the coast, or at least there's some coastline, and then it just opens up.
Idaho's already a weirdly shaped state. Imagine if they had a little section that went over to the ocean. That would be really funny.
But yeah, so I mean, the lesson of this is don't get involved in things that you don't understand. Because somebody calls you up and says, "Oh yeah, no, everybody's been getting the false, not false. Everybody's getting the fuel credit claims. Like you can do that because of the move to electric." You'd be like, "Oh yeah, I think I've heard about fuel credit claims." No, you're thinking about like EV credit claims.
I could totally see that.
And it's just so it's not always practical. So this is my pitch for multi-potentialites, which is my whole sticking point as a multi-potentialite myself.
What is a multi-potentialite?
Glad you asked.
Okay. I feel like I'm talking to Cullen and don't know words. All right, go for it.
Leonardo da Vinci is a polymath. A multi-potentialite is sort of a lesser version of that where you have the ability. It's a jack of all trades.
Okay.
Master of none. That's the easiest way, right? So I consider myself in that category where I know a lot about a lot, but I don't know everything about anything.
All right, there you go.
Not that anybody knows everything about anything, but it's you could touch on different things, but not to the level of like depth. And so a lot of the times I think people who know nothing about an area just assume if somebody comes in claiming to be an expert and talk about it, you're like, well, you're the tax guy, so you just handle it.
Yeah.
But that's where, again, I'm not a tax guy, but I know enough about tax where when I had a tax return a couple of years ago that I got my K-1, I knew something was off with the distributions amount versus what the gains amount was. And then I flagged it, and it was because the returns were prepared by a lawyer who was confident. He's like, no, they're right. I've done hundreds of these. And then actually turned out to be wrong. And I saved everybody. I got a nice bottle of bourbon, I think, as a reward or whatever. But I saved, for me, it was maybe like $20,000 in taxes. For other people who are big investors, I mean, it was hundreds of thousands of dollars that they would have had to pay because they were basically being told that they made double the amount that they actually had.
True. Saving the world from taxes. All right.
Yeah.
Those are serious dollars.
Being knowledgeable enough can be helpful in discerning what you can trust.
And it's a good rule of thumb. If you don't know much about something, be very skeptical around what someone's pitching you.
I think that's why my family always reaches out to me whenever they have a question about literally anything, things that I don't know about. They're like, your brother's going to be a police officer. They asked about these questions, what should he say? I was like, I don't know, be honest. Tell the truth.
That's
but it is funny. So the second one on here is aggressive ERTC promoters, which is employee retention.
Oh my gosh, I get these all the time.
And this involves unscrupulous promoters aggressively marketing questionable claims for tax credits, which could lead businesses into making unfounded claims and facing potential penalties. That's why you can't trust these online gurus.
Yeah, we get these all the time.
And again, this was taking advantage. This is kind of tied to the whole, taking advantage of a disaster, not to set up a charity, but to be like, oh, no, we're going to help your business get these PPP loans or get the employee retention credit. And a lot of the times the people have no idea what they're talking about, and they're just using it as a way to either get your information or woo you in to work with them.
Yeah. And for us, jokes on them. You need to operate at a profit for a tax credit to matter. And no problem. Sure.
That's like the phone calls like, hey, do you need help sweeping your chimney? And you're like, I don't have a chimney.
I got no profits to credit against.
I live on a boat.
We're running a software startup.
And then the last thing on here is compromised mills. Now, I had to look this one up because I wasn't exactly sure looking at it what exactly it was. But it's basically misleading promises to settle tax debts for pennies on the dollar through the IRS offer in a compromise program. So it's often without regard to eligibility. So they say, oh, do you owe money in taxes? Like, we can help settle it for less. And again, they're just robocalling or just blanket calling all these people, and somebody's going to be a sucker and be like, sure, yeah, you can handle that for me. And then as soon as you let somebody handle something for you, then who knows what they can do with that.
And it's like scary getting stuff from the IRS too. I could totally see people falling for this when the fear kicks in.
Yeah.
I know if I ever get a letter from the IRS, I'm like, holy shit. Or the Franchise Tax Board of California too. You're like, oh gosh.
And it feels so scary because you don't know. You're like, I don't know who I can talk to. How do I fix this? And it's never feels straightforward at all.
It's like dealing with the mob.
Yeah. I think mob actually ran things pretty well, I thought. All right, on the last slide.
That was not a dig at the mob.
No, they're good.
That same level of fear.
The slide theme is tax targets. So this is sort of going off of the last one, which is often focused on business owners. This is kind of similar. We got bogus tax avoidance strategies. Promoters sell unrealistic tax avoidance strategies such as abusive micro-captive insurance schemes and misusing tax treaties with certain international retirement arrangements. Just a whole bunch of way of saying, like, people are going to give you bad advice on different hacks that they've figured out of, oh, this is, you could set up an offshore company and do this, and if you invest your money in this trust and through this insurance scheme, then it'll help you save taxes, and then you could pull your money out tax-free. Technically,
okay, let's say you get audited. If this were signed off by a CPA, then the CPA gets in trouble. The scammer.
Well, here's what they're doing. I think they're targeting people who are preparing their own taxes, and they're just a consultant. I'm just going to help you out. I'm going to help you save a bunch of money on your taxes by doing this. All you got to do is fill out these things. Here's the information.
And then the IRS should be like, well, were you working with a CPA? Do they prove it? They say no. It'd be like, all right, well, it's a self-prepared return, and you're the one on the hook for it.
That kind of leads into the next one, which is ghost tax preparers. And these are tax preparers make appealing promises to obtain refunds illegally. So it's kind of the tax avoidance strategies acting as a consultant, as a sort of ghost tax preparer.
They do not sign the tax returns.
And they don't sign the returns. They're like a ghostwriter. I'm going to help you prepare it. It's going to get you all this money back. Just send me whatever dollar amount for all the money I've saved you. And the odds are the government will get this. IRS will look at this and be like, you're not eligible for any of this stuff. You actually owe more. You don't get anything back. And meanwhile, they're out of the money that they just paid the person for this so-called help. And they're on the hook.
All right.
So the interesting thing about the micro-captive insurance schemes, because I had no idea what that was, they're technically allowed. However, they may not be considered a legal insurance company by the IRS and may face consequences if it fails to underwrite coverage properly, charge excess premiums without justification, and shares limited or no risk with third parties through reassurance. Reasonable risk and proper insurance contracts must also exist. All of this comes down to, I think, transparency of all of the theme here is just a lot of lack of transparency of saying, how does this business actually make money? How are we actually going to help you? You shouldn't avoid taxes, but reduce taxes in legal ways. And they just don't do it. The third one is high income filers vulnerable to illegal tax schemes. Just because someone, I commented on this, I was like, just because someone has a lot of money doesn't mean they're necessarily good with the money.
Very true.
Which is weird because I think you always assume if somebody's wealthy, they're like, oh, they must be good with money. Now, barring celebrities of sorts that are just like stumble upon fame and just have a bunch of money and have no idea how to operate. But you'd think with most people who are high earners, well, they must be smart if they have a good job and they're earning a lot of money. But they're specifically targeted due to their net worth. And this is kind of about the spearphishing thing, right? For sometimes it could be an oversight, right? How much is a material dollar amount to somebody who's that wealthy? So they're an easier target from that standpoint because maybe they won't flinch at whether they lose a few $1,000s here or there. And also scammers just know that these targets, the loot's going to be bigger. You're not going to go after the individuals that you can only get small amounts from, but if you can convince one of these high-income individuals that you can help save them hundreds of thousands of dollars on their taxes, you're going to get a nice chunk. So it's perhaps worth the investment.
So this is more of a, You think this is like a quality over quantity
Yes.
type scam? And do you think they're actually developing a relationship with this person, or is it this like online thing trying to steal money from them? Because I could see at some dollar value, it's worth you investing time, getting to know someone, like actually becoming it, and then trying to funnel money.
Well, this is where I can't differentiate my own personal approach versus the broader market, because I think we as accountants often take for granted how much we know about finance and money.
Totally.
And just basic, fiscal and fiduciary responsibility. It comes naturally. And so I'm like, if I'm making that much money, like anybody I work with that ever comes close to my money, I'm going to know very personally. Like that's a requirement. But I could see how some of the, other people could be more vulnerable if they live in an online world. There's a lot of people. My cousin, she's a doctor of psychology down in Palm Beach. She works with a lot of wealthy individuals. So, some of them are they are afraid to leave their house, right? So you think about if you could target somebody like that who's afraid to leave their house, you could build an entire report just online. And it's more money, more problems. They've got bigger issues to sort of deal with.
I was trying to think of what would your target be, and at first I was like, oh, maybe people who have an inheritance because they're not, but they're probably going to have wealth managers and like CPAs already. Entertainment, sports, that seems like people who might not be into finance and stumbled into a ton of money. A lottery winner would be a no-brainer. From there, maybe people like entertainment professional executives as well, not just actors, but like executives at those places. Like, what's the bankers, they're not going to fall for it, like that type of background. But
I've been surprised personally out here because I've interacted with a fair amount of people in this community, and I've been sort of personally shocked how, as I've spoken to them, they find out I'm a CPA. They're like, "Oh, can you help me?" And I'm like, "You don't have somebody. You've been on YouTube for 10 years making a lot of money, and you just have had some run of the mill guy just putting your tax return together and sending it off, like no personal." And for me, this is my advice to anybody who's a CPA out there who has tax practices. Like there is a lot of opportunity to give that personalized experience. My friend Matt, he specifically does that. He's like, all I have to do is just show a little bit of effort, and they're like, oh my gosh, thank you so much. Yeah. And for some reason, customer relationships is not necessarily CPA's strong suit.
Dude, this goes back to what we talk about a lot, the talent crunch. Fewer CPAs, there are going to be fewer firms. Yeah, I genuinely think leaving now to start a tax practice that specializes in some field like that can end up being a very profitable thing. And I hadn't thought about that as a market, but that's a really interesting one because I feel like the YouTuber community or social media, and you're in it, so it's pretty small. So word of mouth would go quickly. Like, oh, I got this great CPA, he gets it, he does my blah blah blah, all this kind of stuff. So I feel like you could. Don't quit Flowcast. You could be very successful.
No, what I like to do is I broker, because I'm not a tax guy. You hire no desire. But I broker. I was like, I've got a guy, and I just, I steer.
Yeah, like we just the firm that I work with that does my taxes, the associate just left to start his own firm, and I'm like, in my head, I'm like, oh man, I really liked him. He was a good guy. Easy to work with, laid back, good customer service, and all that. He's gonna make a killing starting his own firm. He's going to do great. He's going to hire some people, blow it up, and he'll be able to retire off of this firm he's starting because he's zigging when everyone's zagging. Everyone's leaving the profession. He's staying in it. He's starting his own firm. He's going to be able to charge more than average, and he'll do great.
That's awesome. So one example that's a big one in this area is actually discounted art sales. And this one I thought was like a pretty fascinating example. Basically conveying that they can get, I can get you art for super cheap. And it's worth a lot more. So just hold on to it for a year, and then next year you donate it, and its value is gonna be so high that you'll get such a reduction in taxes from your charitable contribution that it'll save you a whole bunch. And I think that's a very susceptible thing because everybody hears about like this art contribution. I mean, I'll get into this in a second, but I do think a lot of people hear about that, and if somebody comes upon a bunch of money and they're like, I want to be part of that community.
I can totally see that.
So all I got to do is, I could just sell, maybe it's not even a relationship where they're helping with taxes. It's just like, oh, this is actually eligible. This piece of art I got for you is super cheap. It's worth way more. And so just like, you buy this expensive $50,000 piece of art, and I tell you that it's worth $250,000, and you say, yeah, just donate it next year and you'll get like $250,000, charitable write-off.
Take it to Christie's, and there's going to be some other person who buys it for higher because they want a deduction. You could totally suck someone into that world.
And the question is like, they're going to bring it, and they're going to be like, this was off from Etsy. It was $35,
or I painted it.
But so this is an interesting thing, and I'm curious because, I feel like you're starting to get into that realm of, is art just a tax shelter for the elites?
In part.
Yeah.
I think so. Yeah. I mean, I think there are people who genuinely like
Appreciate
it.
art, yeah.
For example, I was recently at a very rich guy's home.
Yeah.
Saw $100 million worth of art, like on display in his home. That's a guy, I don't think he does it for tax sheltering purposes. I think he does it for appreciation, and he appreciation of the art itself and the value of the art, because these were like Picassos, and it was like crazy, man. It was crazy seeing all this. But then you got the ones where they buy something and it goes into storage for 10 years. You're never looking at it, and they're going to flip it at some point. So there are definitely people using it for tax avoidance purposes. But the guy who likes art, he's getting the benefit of all three things. He enjoys it, it's getting appreciation, and he gets deductions as a result of it. So
that's got to be the most difficult valuation job of how you I mean, it's so arbitrary.
There's not. There's not enough of a supply and demand dynamic to like establish a fair value at any given day.
Yeah. Well, I think there was like a technique, if you like corroborate on it, where it's like you can buy a piece of art, sell it to somebody else for, so like a business, maybe like a business buys a piece of art, they sell it to somebody rich for whatever amount of money. That builds up their books from like a gain, right? So they could showcase this big gain. That person then can, let it appreciate or whatever, and then donate to an organization that claims to have valued it at way more. They get a huge write-off for it. I don't know.
The easiest way to me is like if you have some shady business arrangement where maybe it's off paper or something, but it's like, hey Drew, if you help me do XYZ things, I'll give you $100,000. Yeah. Now, how am I gonna wiring you $100,000 is a little shady. Giving you $100,000 in cash is maybe not all that practical. But if you sell me a piece of your artwork for $100,000, I can send you that money. And it's for a good or a service, and then we can just be done with it and move on with our lives from there. So I think that's probably a pretty, in the fraud, sketchy criminal scene, I think that's probably like the way Russian billionaires transfer money is maybe through some of the art pieces that they're dealing with.
Fascinating. So the last piece here is whether it's qualified as art or not, the art of social media. And this is just something that I've seen all over the place. A friend of mine, Lori Lynn Wilson, she's big in the tax Twitter community. She makes videos specifically duetting or stitching, calling out these gurus, that claim to offer this tax advice. And she's like, this is the worst advice I've ever seen anybody give. And people just fall for it because it's very attractive stuff. And
it's what you want to hear, right? Like, here's how I avoid some taxes. And I have a home office. I can deduct 100% of it, whatever.
Did you know that if you have a home office, did you know if you buy this car? And it's just all of these things that are rooted in like one specific nuance of truth, but then they try to expand it and say that anybody can do this and reach out to me or sign up for my thing. And it's just a way to get eyeballs, engagement, play the algorithm, fish for emails and stuff. And taxpayers are misled by incorrect or deceptive tax practices on platforms like TikTok or Instagram, which can lead to serious tax issues, especially because a lot of people then go to their accountant or they just apply it themselves and like, oh, I saw this, trick on Tax Talk is wild, like hiring your children. Like, oh, did you know you can hire your baby to work for your business? And it's like, they have to actually do something like of value, right? But that's not, you don't hear any of the depth underneath it. It's just like, yeah, you can hire your kids. And next thing you know, a bunch of people are going around telling everybody's like, oh yeah, did you know you can hire your kids and write that off? And the number of people that just are W-2 employees that are just like, how can I write stuff off to reduce my tax? I'm like, you're a W-2 employee. You don't get that. And then people are like, well, I just got to start a business. I'm like, yes, you could start a business, but the business has to make money to get offset by whatever you're trying to write off. And you don't get to just start. It's not like magic and people just think it's magic. You just start a business and then you can write every expense off. Yeah. Like that's not a business.
The business needs revenue.
Yeah. So just a lot of stuff like that on there. And that's for the sort of
I appreciate your friend calling all this stuff out. That's like doing some good in the world of
it's
taxes.
Cool. It's encouraging to the community, I think. So these are not on the Dirty Dozen, but I felt like you mentioned at the beginning, very important to note. This slide theme is just the dangerous AI world. And scammers are using AI to create more convincing fake identities and communications. It includes AI using AI for phishing attacks, where emails and messages are crafted to look incredibly realistic. Scammers also utilize AI to generate deep fake videos, audio of trusted individuals, tricking people into believing they're interacting with somebody they know or a public figure. I think the public figure one could be, people are very tempted, one of those. For this, you have to kind of sniff out, is it too good to be true? If Tom Brady DMs you, odds are he probably didn't.
Yep. Very true.
So
that's generally a good litmus test. Is this too good to be true? Yeah. If yes, it's probably not true. This gets the voice one. I get so concerned about. There's so many times where it's like call and say yes to like verify this. Like when you're closing mortgages and wiring stuff around, like that's another common thing, the bank calling you. So there's more than enough audio of you and I, for example, on the internet to spoof our voices. There's more than enough content out there. So that's why I get particularly concerned about this. I can absolutely be spoofed, video and audio, and I have no idea how that's going to be used against me or my friends or family or business going forward.
Yeah. That's I think why the goal is to just spread the awareness of just being professionally skeptical across the board. It doesn't just apply to audits anymore. It applies to everything that you do throughout your entire life. Heck, you could apply it to nutrition facts on food, and how many have deceptive labeling that makes it look like it's super healthy. And it's not. You actually look at the ingredients and you're like, there's a whole bunch of stuff in here that it doesn't look like. It says only the good stuff. And then you look at the list and it's like 50 different things that you've never heard of. Like, I don't know, is that only the good stuff or is that just a bunch of stuff?
That's a bunch of stuff.
The other area about this too, which is kind of crazy, is like real-time response generation, because now AI can, power chatbots to engage with potential targets in real time, providing responses to inquiries and prompts that feel natural and convincing. And you could deploy that across the board to customer support and tricking users into thinking they're actually talking to real people and, coax them out of personal information. And the layer of that is the behavioral analysis and targeting, because the AI algorithm can analyze things so quickly and identify, potential victims and what they're more susceptible to based on their behavior online. And when you see somebody who's constantly, maybe they're constantly looking up like how to start a side hustle or how to build a business or entrepreneurship things, those are the people who are more willing to, I think, take that fruit of, is it too good to be true? Because you are a little more willing to take the risk. And I know accountants are on the opposite side of this guy. I'm not worried about accountants really getting scammed at all. Because when I worked at Grant Thornton, I had a few colleagues because I was always a little more of that entrepreneurial spirit. And I was like, I'll try something a little edgy, because if it works out, I'm going to be like, haha, suckers.
Totally agree.
And I told him, I was like, well, if I did this, say I enrolled in whatever program and I was actually able to somehow, this Amazon drop shipping thing was making me $10,000 a month and I only had to spend 4 hours a month doing it, is that something you'd want to get involved in? And they were all like, no, I still don't think I would do it. It was like, even if I personally, I went ahead, I did it, and I'm showing I'm actually doing it, because I would want, for me, that's the proof that I would need. I want somebody who I know and trust, I am actually doing this, I will do it to you, not some face on the internet saying I can help you do this, because it's not that I'm not willing to invest the $5,000 or $10,000 up front to make this thing happen. I'm totally willing to do that. I just don't know if I trust you or believe you.
Yeah.
And every accountant who I spoke to at the firm would be like, nah, I still don't think I would do it. I'll just take my paycheck from the company.
This is an interesting point. I think our audience is probably least in need of advice around how to avoid fraud. And so that's great. So mostly, if you're listening to this, please tell your friends, your family, your non-accountants out there about all of this going on. Because gosh, and as accountants, we have such a moral compass and right and wrong and everything. And this just pisses me off to no end that this type of stuff is happening out there. And you're exploiting our field, which is objectively complicated. And
and then when there's complication, people are confused. When people are confused, they make poorer decisions.
They want an expert.
Yeah.
They want an expert.
And
why humans are still going to exist in accounting.
Yes, there we go. We keep making the play. So the last one on here, and this one I think is the most applicable and interesting, especially for business owners, automated software interaction. And AI can create, we already talk about fake websites, but imagine if an entire interface was able to be mimicked, or if it could, it can integrate, so scammers can create software that interacts with legitimate programs and platforms that carry out tasks like spreading malware or stealing data without human intervention. One that comes to mind is a lot of these plugins that will link to your bank account in order to pull, information to do financial planning for you, and will automatically categorize stuff. And that's where you start to get tricky of how safe is the data. I think that's where you get into the SOC compliance stuff of how are you keeping this private? How are you keeping this secure? You almost need a I don't know. I mean, maybe you could tell me. I don't know. Is there a stamp or a label that goes this is SOC 2 compliant? That's been validated and verified, because it's good if you're looking into it. If you're an investor or if you're a potential customer, you'll look into it. But if you're a regular consumer, I'm thinking about on consumer type stuff.
Yeah. Well, like
thing just pops up, click here to accept.
Yeah, let's say you're using like mint.com, for example,
Sure.
right? And then you're plugging into all your bank accounts. Unfortunately, Mint was recently acquired by Credit Karma, and I got to say the user experience went down pretty significantly with that. But they're connecting through, my guess is Plaid. So Plaid is an underlying banking connection service used for like consumer bank accounts. Unfortunately, I know way far too much about like the bank integration world, but Plaid will then have their SOC 2 issued and reported and audited by whomever they hire for auditors. So by using Mint, you are trusting that Mint fully vetted Plaid.
Yep.
By using that, you are trusting that Plaid hired good auditors to ensure SOC 2 compliance. And then beyond that is doing security assessments and vulnerability assessments and all that kind of stuff on a regular basis. I mean, to exist as an entity, like, Plaid's got to be secure about stuff. And so I think they're fine, but you still need to know what mint.com is. You want to vet it like a little bit, make sure it's good. And you don't want to be giving your banking information to just anyone.
Now, do you think this makes it a lot more difficult for anybody who's trying to get into the software space in general to start up a company with, like, there's so much security that you now have to invest in order to ensure that everything is secure. I think it makes it very difficult for the little guys because, like, I'm not going to take a risk on a small startup company that's just kind of getting going, claiming that you trust the big organization. Oh, this is owned by J.P. Morgan. Okay, I can trust it. Oh, this is owned by Oracle. Okay, I can trust it. But when you get to a small, like, hey, we have this idea, we're going to change the way that you use cash registers or something like that. You're like, I don't know if it's worth it. I like your idea. I want to support your startup, but maybe you'll make things more efficient. But is this really a risk I'm willing to take?
Well, yeah, you just kind of figure it out. You have to spend money and time to make all of it happen, and then the more you go up market in different industries, then the more intense it gets. For at least our approach internally was there was a company we were demoing. They really wanted to use Flowcast, but they had arguably the most extreme security requirements in the world because of what they did and who they sold to. So they were like our North Star for if we can get them and handle all the check boxes from security and sign them, we are good to go. And that was 3 years of work.
Wow.
To get there. 3 years. Yeah.
I think it just proves that there is, when it comes to some of these more game-changing things, there is a barrier of entry. And I think this is not possible without VC or PE, right? It's like that's the only way that this actually happens.
Yeah, you need at least a couple million bucks to be able to like do the rest of what you're trying to do with the business in addition to the regulation and the security.
Yeah. Which is why there's a lot more people starting clothing brands than there are starting SaaS companies.
Yes, very true.
Especially in the financial world.
Well, it's so interesting with AI because I do think at least in terms of building the tech, the barrier to entry is lower. You can build things faster. But on the regulation side, there's already enough, and then presumably there's going to be more on top of AI here. So I wonder how much that slows it down. And then if you want to go back to the whole, regulatory capture and how much is the big company is going to throw their weight around and try to get policies passed to make it even harder for new entrants in the space. And it's certainly in their best interest to do that. And I think little old Flowcast is right. Good spot in the middle. We're small enough to be agile and build on these things, but we're big enough to be able to afford any of the regulation complications that might be coming our way. So
that's I think
I like where we're at.
That's the golden balance. I think you want to be not so big and clunky, but you also want to be big enough to be secure.
Boom.
So this is why professional skepticism is the most valuable mindset I think that accountants have. That's my concluding cycle keynote there. And I had noted, I was like, I think it is our duty as professionals in the industry to look out for and make aware everyday individuals who, like I said, I think we often take for granted the common sense that we have that's not so common necessarily for others, and to just let them know what to look out for. And I think that's how we spread the power and the beauty of accounting to the world through our awareness campaign of sharing our knowledge. We're never going to teach them the intricacies and the technical details, but you can be a supporting friend to help them make aware of what to look out for.
I agree. I think this is an area where, I hope most of our audience didn't need this advice, but it kind of also highlights the simplicity of some of these scams and how the fact that this list has to be published by the IRS shows you that enough people are vulnerable to it to where, like, tell your family, particularly your parents, your grandparents, like the older people in your life who are more susceptible to this, like, heads up, here's the new stuff going on, like, definitely, and give me a call if you have any questions.
Yeah.
Like you might get annoyed getting I have to reboot my computer call all the time, but if at the end of the day you help your parents not get scammed for, thousands or tens of thousands of dollars or whatever, that's going to be worth all the time you put into it.
Yeah. So accountants will be they're the superheroes of this story.
Yes. There you go. Love it. Elevating accounting.
Awesome. And that's what we're here to do. So I hope everybody enjoyed. This was the 2024 Dirty Dozen episode of the Fintech Flo. We'll check back next year and see what everything's going to be like.
Yeah, great idea, Drew. I loved it.
Woo. Great show. Thanks for checking out the Fintech Flo. As a reminder, this episode is available for CPE credit, and you can get that at Flo Academy or on the Earmark app. Details are in the description below.